Fed up with the ever-shifting sands of finance? You're not alone. The world of investing has become a roller coaster of uncertainty, leaving even the experts scratching their heads. Take, for instance, the case of Ray Dalio, the billionaire investor and founder of Bridgewater Associates. His recent change of heart about cash and bonds has left the financial world reeling. Not too long ago, Dalio boldly declared, "Cash is trash." His argument was simple: inflation was eroding the value of cash, making it a poor investment choice. But hold on to your hats, because Dalio has executed a spectacular U-turn. In a recent interview at the Milken Institute Asia Summit, he admitted, temporarily right now, cash, I think, is good, and the interest rates are fine. So, what's driving this about-face? It's all about the changing financial landscape. The Federal Reserve, in a bid to tame inflation, has raised interest rates significantly. It's a move that has pushed the federal funds rate to its highest point since 2001. For investors, this translates into high-yield savings accounts offering annual percentage yields, APYs, of over 5%. But it's not just the attractive interest rate environment that's swayed Dalio's perspective. He's taking a step back from bonds and debt instruments. Why? Because of the looming global debt crisis. Dalio is concerned that when debt becomes a substantial part of an economy, it can turn into a ticking time bomb. The real challenge arises when investors decide not to hold these bonds, which can lead to a delicate balancing act for central banks. As Dalio puts it, we're seeing that dynamic happen now. With rising interest rates, central banks face the tough decision of allowing rates to climb or printing money to buy bonds, a move that can have inflationary consequences. So, what's the takeaway from Dalio's shift in perspective? It's not just about the value of cash, it's about being in the right place at the right time. Geographical considerations are crucial, and diversification remains a key strategy to mitigate risk while maintaining returns. But there's more to this financial puzzle. The global debt crisis looms large, with global debt hitting a staggering 238% of the global GDP. And when investors decide not to hold bonds, central banks may have no choice but to print money, potentially triggering inflation. In this ever-changing landscape, adaptability is essential. The world is evolving, and Dalio believes that we're on the cusp of radical changes. The implications of these disruptions, from elections to the debt situation, are going to transform our world year by year. And then there are the emerging technologies that are propelling us through a time warp into a different world. It's not just about who's creating these technologies, it's about who's using them in the best possible way. There's a fine line between embracing innovation and getting caught up in the bubble. So, where should you invest your capital in this whirlwind of change? Dalio points to emerging opportunities in regions like emerging Asia, Singapore, Vietnam, Indonesia, and India. These areas are poised for significant growth, presenting promising investment prospects. But it's not just about where you invest, it's also about what you invest in. Consumer staples might not sound exciting in an era of high-tech marvels, but they have enduring value. Procter & Gamble, PepsiCo, and Coca-Cola, for instance, offer essential products that consumers continue to purchase even in tough times. Plus, they're known for their dependable dividends. In the end, Dalio's investment canvas is a vivid tapestry of global perspectives. It's a reminder that the world of finance is as diverse as the world itself. Success in this ever-evolving landscape lies in the ability to see value in both the tried and true and the emerging. As we navigate these shifting viewpoints, it's clear that the only constant in finance is change itself. Ray Dalio's evolving perspective on cash and bonds underscores the nuanced considerations that seasoned investors weigh in today's complex financial ecosystem. So, don't be left in the dust. Stay informed, stay adaptable, and remember that the world of finance is a dynamic and ever-changing arena. Like and subscribe to our channel now to keep up with the latest insights and developments in the world of finance.